Hello there, my friends. Chris Marcus here with you for Arcadia Economics. Thanks for joining in today. We're doing a SilverFest marathon, getting a bunch of those panels up there. And obviously, it's quite a pleasure to have a presentation from Keith Neumeyer of First Majestic Silver as part of that. In addition to being one of the largest and purest silver companies out there. I'm proud that they have been a sponsor of what we've been doing, which has allowed me to continue to keep bringing silver information, spreading awareness. They were also a big part of SilverFest, and this was Keith's presentation. It gives a great overview if you're new to First Majestic, or even if you've been learning about them for years. I was having fun rewatching it. He did talk about Eric Sprott's investment in the company. And interestingly, as I was taking a look, he shows a slide with their top shareholders. My former trading shop, Susquehanna International Group, was on there, which I thought was interesting. They don't lose on many of their trades, let's just say that. So again, if you'd like to find out more about the company, what they've been up to, some of the different things going on, you heard Jeff Clark talk about it the other day, but fortunately, here it is directly from Keith Neumeyer of First Majestic Silver.
Hello, everyone. Welcome to the First Majestic Silver Corp presentation for today. I'll just go through the presentation. Of course, we have our forward-looking statements in front of us. Going to the first slide, 60% of our revenues from the sale of silver, which many of you probably know, but we are the purest silver company in the world, which puts us in a pretty unique camp. We produce two metals only, one, of course, 60% silver and 40% gold. All our productions in the form of dory bars, which is fantastic for a mining company versus, the alternative of producing concentrates. So I'm pretty pleased about that. In 2020, we've had 3 mines operating, and that's down from our peak of 7 operations back in 2017. But over the years, we really focused our efforts on our top 3 mines, which is really the story for 2020 and 2021. Large land access, large land holding base in Mexico. All the assets are, of course, in Mexico, and Mexico is obviously the world's largest silver producer, of which I think we're number 3 in Mexico. So the market cap has been kind of stable, despite the fact silver prices have gone, up quite nicely with gold. The market really hasn't responded yet, which is interesting, but nevertheless, we have a very strong balance sheet. Many of you probably saw just yesterday Eric Sprott, Canadian billionaire who's quite well known in the silver and mining space, agreed to put $78 million into First Majestic at $15.60 a share. He purchased 5 million shares from Treasury, so that Treasury will obviously go up substantially as a result of his investment, which will close next week. So we're thrilled to have Eric in our top registry. They'll be up there in the top 2 or 3 registered shareholders of the company. And obviously you can see there with Wheaton and the breakdown between retail and institutional shareholders. The assets are spread around. We've been in business for 18 years. I put this coming together in 2002. And we've been really built this business on acquiring assets. We've got a big portfolio, 3 producing mines. The red dots, the DIMAS, Santa Elena, and ENCANTADA are currently our big producing operations. San Martin was suspended over a year ago now. La Pria was recently shut down at the end of last year, and Del Toro was shut down earlier this year. La Catera was shut down in 2017. And really the reason for that is because they're just really small mines, and they're all kind of 1 to 2 million ounce producers. And when we were able to acquire Santa Elena and then later San Dimas, the investment capital that we had just made more sense to focus on the top assets in the business, and that's what we've already done. And that's really the story for today. The production has grown virtually every year. We've had a couple of setbacks. 2020 hasn't been an easy year for us. Q2, we had the operation shut down for a good period of time. They started producing again in Q3. Q3 is still somewhat challenged. We still don't have the full workforce back yet due to the COVID issues, but we were expecting, or at least we're hoping, that Q4 will resume back to 100% production. 2021, we expect to be a pretty good year with some of the investments that we're currently making, and I'll talk about that as well as we get through this. This is the guidance we put out. We did suspend guidance back in March due to the obvious. We came out with this new guidance in early August, and nice to see the cost drop from our previous guidance. Production has come down a little bit as well. I think we lost about 1.5 million ounces of production due to COVID, but still pretty reasonable numbers. And at current metal prices, obviously the cash flows are pretty nice to see coming into the business. We have reduced our CapEx back in January of 2020. Our initial CapEx that we announced was 171 million, pardon me. And we have reduced that on a couple of occasions. And now this is our most recent number. We actually may come in even less than this number because deploying drill rigs and deploying construction crews to get some of our innovative projects up and running has been a bit of a challenge because we've had to build remote camps to keep the contractors away from the communities, and there's just a whole bunch of extra things we had to do as a business to assure the health and safety of our workforce, and that has likely will delay some of this investment. So I don't know what the actual number will be prior to or at the end of December 31st, 2020. It'll probably be something a little bit less than this number, but nevertheless, that's our current projection, or at least our current publicly announced number. Reserve growth has been there. We still kept drilling. We're pretty happy that a lot of the rigs have been deployed. I think we've got somewhere around 8 or 9 rigs at San Dimas. We've got another 4 or 5 at Santa Elena, and ENCANTADA is a little bit slower, but we're getting those rigs up and running again. We expect to be back up in the 20 rig range within the fourth quarter. And we're adding ounces, which is a great thing. And you can see by that bar there, the grades are going up. So we've got ounces going up, grades going up, and that says a lot for the future of these three operations. So it's San Dimas. A lot of people know about this mine. Obviously, it's been in the hands of a couple of different mining companies. We're fortunate enough to get it into our portfolio in May of 2018. It's a very high grade operation, pretty low cost operation as well. The bump up in Q2 costs was really a result of the COVID extra costs, the lower production, but the manpower still being placed. So, of course, costs do go up, but those costs will revert back to normality over the next couple of quarters. We're actually very fortunate in getting the HIG mill and some of the big cranes delivered to site in Q2, right in the middle of COVID. The government was able to or willing to give us permits. So these big, huge pieces of equipment that did arrive on the Pacific coast of Mexico in Q2, we were concerned that they were going to sit there for quite some time, but the government allowed us to transport them on site. And they all arrived beautifully on site, and they're sitting there waiting for the construction crews to be deployed and that investment to continue on, which is going to be great for this operation because we're looking at San Dimas as a 3,000 ton a day operation in the next couple of years. There's a number of innovative things that we're doing, including rebuilding and re-automating, or not re-automating, but just simply automating this mill. It's an old mill, hasn't really been updated for something in the order of 30 years. So a lot of the technologies that we've adopted throughout the business are being adopted here. And it's going to be quite exciting watching this mine transform over the next couple of years as a result of the investment that's currently underway and will continue until into 2022. And that'll include, of course, the upgrading of the hydro dam, which is currently supplying about 50% of the energy. And we're hoping to see hydro get up to about 100% of energy once that project is complete. So it's going to be a much larger mine and much more profitable, we believe, over the next couple of years as this investment starts to bear fruit. This is some of the other things. You can see the picture of that HIG. The HIG on the right-hand side of this photograph, that's the HIG that was installed at Santa Elena in mid-2019, which is working beautifully. And, of course, there's the current hydro dam on the left side, and there'll be a second dam built upstream there, so the dual dam process, and the permitting is underway, and it should happen here shortly. And the engineering, that'll be put out to tender, hopefully. Well, it was planned on going out to tender by the end of 2020. That might be somewhat delayed, but that tender process will start sometime in the next few quarters, and we hope to break ground there and have that up and running by, as I said, 2022. So getting into some other projects, ENCANTADA, has been on our portfolio since 2006. Right now, it's in one of its up modes. Grades here have improved nicely. Recoveries have shot through the roof. We've never had 70-80% recoveries at this operation since we've owned it. We made some tweaking. We changed out some staff. We basically changed the way of operating this mine back in mid-2019, which really paid off, and the higher recoveries came right in line with higher grades, and it's really helped cost. So it's pretty steady state. We're not expecting any growth here in this operation over 2021 and 22, but we are expecting just a steady state, solid operation, 100% silver in the form of Dory bars, and a good profitable mine going forward. Santa Elena, here we're going to see some pretty substantial growth. The mill itself at 3,000 tons a day is currently operating at about 2,800 tons a day. It's not really going to be growth in the throughput. What the growth is going to show up in is grade. So we did put the HIG in here in July of 2019. It's the first HIG mill that's currently operating in Latin America. And it's also, as far as we know, the only HIG mill that's getting direct feed from any mine, because most of the HIGs that are being used worldwide are used for reprocessing concentrates. So this is getting direct feed right from a mine, which is pretty exciting. It's really excited a lot of people within the industry. The vendor, the manufacturer themselves are very happy with this installation. It's just seamless, and it's added a lot to this operation. When we did the economics on it, we needed about 2% extra gold and silver. We ended up getting about 4 to 5% extra gold and silver recovered from the ore, so it's really paid off. You see the higher cost there. That is purely COVID related. Unfortunately, this mine did shut down entirely. The DIMAS mine did operate a little bit in Q2, so it did add some ounces. Santa Elena added virtually 0 ounces in Q2, where you can see the number there, but it's obviously dramatically smaller than what it would have normally. So the cost on a per ounce basis shot up dramatically. So that short term, that'll just go back to its normal cost structures over the next couple of quarters. And the other great thing we should also mention before I get on to the next slides is the diesel. This is our last mine that's currently operating on diesel, and we spend about $12 million a year on diesel for this operation. And by converting this over to LNG, we're expecting to save about $9 million per year on diesel. And it is somewhat delayed, unfortunately. We had expected it up and running by October, November of 2020. We're now looking to see that kick in first quarter of 2021. And this is the ERMITANO. Now, this is really the comment I mentioned earlier about improving grades, not throughput to increase production here. It's related to this red dot, ERMITANO, in the blue square here. So all the color on this slide is First Majestics, the green, the blue, the pink, the other darker green, and the kind of orangey yellow Elgachi. That's all ours. Many of you probably heard of SilverCrest. That's the cheapest. That's the white square that we surround with the Los Hernandez and the Elgachi properties. We had a couple of rigs drilling on Los Hernandez. They're back now drilling, which is nice to see. We're going to get a rig or so in the Elgachi area as well. The rigs are being deployed back to ERMITANO. And of course, there are underground rigs working on the mine itself at Santa Elena, which is the cross within the pink. That's where the mill is. The red dot is only 4 kilometers away from the mill. So this feed we're developing now. You can see on this slide here on the right-hand side all the development that's been underway for the last year. We're now in the ore body. We're developing within the ore body. We expect to start extracting material from this mine in early to mid 2021 and start to displace the feed that is currently being fed by the heaps. 60% of the ore at Santa Elena is mine ore. 40% of that ore being fed to that mill is heaps. This ore body will displace those heaps. So we'll stop producing from those heaps, and we'll start putting this ore through the mill instead of that 40%. So in fact, what's going to happen is that 40% of the feed will actually go up by 10 times its grade that's currently being fed to that mill. So this material is 10 times higher grade than the current heap feed that's being fed to the mill. So despite the fact throughput will stay the same, about sub 3,000 tons a day, we're expecting to see ounce production go up fairly dramatically, as well as costs drop as well, with the increased production at this operation. So it's pretty exciting. And also, I should say, there's a lot of parallel structures in this area. This is a very, very prolific part of Mexico. We've got 100,000 hectares surrounding this mill. There's geology everywhere. This is a discovery that we made back in 2017. And we're really going to expand the exploration project around this operation. And we're expecting this mill is going to be fed, high-grade ore for the next at least a couple of decades as a result of this discovery and also future discoveries. So going to some technology, First Majestic, I think, does kind of stand out in a way. We've, back in 2014, I put together a team of, individuals that, I gave the task to, turn over any rock possible to find, any place to save money. And we found many places to save money, believe me. The mining sector is very inefficient. It's an old, archaic industry. It's filled with, engineers that don't like change, that are stuck in their old ways of doing business. And I've battled many of them myself personally, and I continually to do this to this day. This is one of the battles I won, quite frankly. And HIG mills is really the solution, I think, to mining worldwide. And we're one of the first adapters of this technology. Ball mill, which is the standard grinding technology that most mines use worldwide, has limited capabilities. It can get the grind size down from rock coming out of a mine to maybe 100 microns, maybe 120, 130 microns. To get it, the material down to, 60, 70 microns. It's very difficult, very cost prohibitive. You're burning through balls, you're burning through chemicals, and of course, electricity. You have to recirculate this material through the ball mill multiple times, and you're just burning money. This technology here can actually get material down to sub 50 microns on a first pass, which is perfect. We feel 50 microns is kind of the magic number. We've got tests that have taken our down even lower. We're doing metallurgical studies at 20, 30, 40 microns, and we're finding the magic and what the proper size should be coming out of this mill and going through the cyanidation process for the optimum recovery of metals. And it's pretty exciting. This technology is being adopted at DIMAS. The piece of equipment is there. It's on site. It'll be installed over the next 6 months. Santa Elena has also received theirs as well. It'll be getting, ELENA'S, has received theirs as well. And they'll be getting theirs installed hopefully by mid 2022. So we'll have 3 of these up and running in 3 of our main operations. And if we ever bring another one of our projects online that is currently in care and maintenance in our portfolio, or if we ever do future M&A activities, this is a core technology that we'll be adopting for the future company-wide. And this is really the results. As I said earlier, we needed 2%, and we got into 4 or 5%. The Q2 numbers drop there is just really due to the limited throughputs, and it wasn't being run at optimal levels. So you can't really take Q2 as a measurement, but that increase of 4 to 5% was quite huge. And you can imagine 6.5 million ounce producer getting 4 or 5% extra silver and gold. That pulls right to your bottom line. And we're going to be seeing those similar types of numbers at San Dimas next year. And some other technologies that we adopted, we are big on technologies. I'm always pushing my team to look at other ways of saving money, looking at other ways to improve the business, looking at ways to reduce our environmental footprint, and being smarter in producing metal, and doing it in the cleanest fashion possible and the most profitable way possible. And we're continually examining different technologies, and this graph says a lot to me, because it all comes down to recoveries. Going back to 2014, before we really started this whole process, we were getting mid 60s. So we had 30+% of our metal, going into waste. And, it's a lot of silver, gold, lead, zinc just going into waste. And, today we're pushing 90%. I think our last quarter was 88%, if I recall correctly. And our metallurgists, our teams feel that we can get, north of 95% within the next 1 or 2 years by continually pushing the envelope on adopting technologies. And that's a big focus of ours. And going into just the final slide here, you see the photographs here, the LNG gen set is installed at ENCANTADA. That was put in about 4 years ago. And the same company that did that installation is currently on site at Santa Elena doing the installation of the LNG system there, converting that over from diesel to LNG, which we're pretty excited about. And of course, the lower photo, that's the Hig Miller arriving on site. It arrived right in the middle of COVID. The government was great. They were super cooperative. They allowed us to take over the highway. During COVID, it was probably the best time because no one was on the highway. So it just made a lot of sense for everyone that we were actually able to transport this thing from the Pacific Ocean all the way to, inland, to central Mexico, and it arrived without any problems. And it's now sitting there waiting for erection, which, as I said, will be another 6 months or so. So you could read that rest of the slides yourself, and just going the last couple. Purest silver company in the world, as I said. This is BMO's numbers, but we are definitely up there in our purity, and it's something that we focus on a lot when we're looking at how we're building the business and how we're maintaining the business. And our breakdown in production, as I talked about earlier. Our share price performance, over the last 1, 5, and 10 years, First Majestic it has become, really, in my opinion, anyways, the go-to, silver investment in the silver space. And thank you very much for your time. And if there's any questions, please feel free to contact me or Todd Anthony at the company. We'd be happy to answer any of your further questions.